Welcome to Yobit Solutions. This video is a part of the series regarding managing your finances using Excel. In the earlier part of the videos, we developed a simple yet dynamically connected T account and a trial balance system in Excel. The focus was to give users some education background behind the accounting fundamentals and also about the Excel fundamentals which would be utilized. And the links for those earlier videos are in the description below, and we highly recommend that you watch those videos before moving on to this segment, because now we shift our focus from more education side to a more practical approach, because in some additional bells and whistles needs to be added before you can practically use this solution for your own business purposes. We start out this in this segment. We first define our financial statement subsections, because this is how the reporting would be done under those subsections regarding, for example, you need to categorize your assets into current, long-term, and the other assets, and so goes for the liabilities and the equities. And in these subsection is where we define our T account categories. Like you can have a cash, short-term inventories, account receivables, all those comes under the current assets, and then similar items comes under the long-term and equities and liabilities and so on and so forth. Now, inside the categories is where we define our T accounts. So that is the relationship, because even though the actual transactions will be done in the T accounts, but the sum of those T accounts would needs to be added back into the categories, and then the categories would have to be organized under the financial statement subsections. So that is the approach. And like for example, as you see here, that you might have a multiple sheets where you would be using your journal and the ledger entries. And there's a distinction between the journals and the ledgers. We'll get to that later on. But this is how you will record your transactions in those sheets. And once that part is done, then we developed a summary sheet where we add up all those sheets dynamically to lay down the total sum against the various categories in the T accounts. And then we take those summary sheets and then associate that sums into the financial statement. So that relationship going from elementary level in the T accounts to all the way up to our financial statement is very important, because this is how we will publish the numbers. Before we jump into Excel, one humble request: if you like the content so far, please consider subscribing to our channel and also like this video. It will immensely help us. At the same time, we'll make sure you remain updated on whenever a new video is uploaded. Thanks for consideration. So let us go through the fundamentals items that I set aside for the design. For every sheet that we work on, whether it would be journal, ledger, or reporting, we assign a special entry on what kind of sheet type is it, because dynamically when we do the trial balance at the end, we need to sort these Excel sheets in the file based upon what their usage is, so that proper transactions can be added for the summary. So we do need to know every Excel sheet that we add, what kind of Excel sheet is it. Active is just a true or false that I use as a standard practice whenever I make a list which can be extended or reduced based upon user's particular need or scenario. And that way, whenever you don't feel that you don't need a certain choice for an entry, like for example, when we make a T account, you can have I can go ahead and add like over 100 accounts, but if you only need 10, you don't need to delete the other 90. You can just turn them off. That's just a standard practice. This one here is nothing but the filtered list here with the true, because all of these items are true. So there's technically no difference between what this column is and what this column is. Going further down, this is our base account definition that we developed in our earlier videos. No change to that approach. It's just this is actually the only place where we manually assign the debit side or the credit side column sign for any account type. Going further down, that this is the transaction table. Whenever we bulk import or add multiple entries, we will only update the math for the trial balance once we assign a status to a given transaction. That's just a way so that at every entry, you know if there's any error in the system. Complete would be a completed transaction where both side of the two entry system are done. The reconciliation would be used when you already have a pending transaction that where the money was cleared from the bank and you can reconcile the solution. That would be the special status. The pending would be at the status for which is something new. And if it doesn't make sense to you, I'll try to explain, but that don't worry if you don't get it for now, but it will be a lot more clear when we develop the complete solution in the future. This one here is in certain accounts where you have not hard coded the account receivables or account payables, because the minor accounts could be many of them. So to save some time from hard coding, by assigning this status, an automatic accounts receivable or accounts payable entity would be created for the account in question, and whenever the amount gets cleared, go from pending to complete, then that entry would be already balanced. So these are the three status that are available, but they are not available in every type of transactions. One dimensional here is more like journal entries. The two dimensional would be when we try to implement a more like an automatic balancing on an ledger accounts, and this is a special entity which we would use in future as well. The required column in the transaction, this is the special requirement that is applicable to any journal or the ledger entries sheet in the file. We need these columns in the tables to be defined so we can dynamically go and do the math and summarize the data in our summary sheet down the road. We need to know what account is it, what quarter this transaction is, what is the status of the transaction, what is the total sales tax that was paid. Total and gross is the total. The total is nothing but gross minus tax, but we do need to know the address of that column location in each Excel sheet as we go. So these are the sections that we discussed earlier part of the PowerPoint, where we assign these sections as a part of the financial statements. Let's relate the relationship between the T account categories to the sections. So this is the new table here that was added for the categories. ID is just a unique entity against every account that we add in the categories. This account is actually the category of accounts, not necessarily accounts. And the section here is that whenever we enter an account, we assign what section does that belongs to. And if it's an asset, then let's go back in here. If the base account is an asset, these three choices are available. If the base account is a current liability account, then these three choices are available. Otherwise, just use not applicable at this point. And that's just the whole purpose of this column is to associate a given account category to a section. And then the base functionality of a base account, the debit, credit, and active, they're all covered in the video 2 of this series, and you can revert back and watch those videos if you haven't seen that. So one other thing that throughout the Excel, wherever you see a yellow colored cell, that means it is an auto-derived formula, and that way it's just an aid that users should not overwrite these values. So base is covered, account is covered. The only two things we haven't touched base on is then if is pending column and an abbreviation column. Is pending column here is basically all those accounts where an auto-generated accounts payable or accounts receivable is not created by the user. Then we can set this and to be true, and then an automatic account will be created for them when they need by setting up a pending status. But this is only applicable for equities and the equity in the negative direction accounts. It's not available for asset or liabilities. And you will understand down the road why that is required. Now, abbreviation column is just a handy tool so that we can, any account that we create under this given category, we will prefix that with our preferred letters. You can change it if you want. I just use A for assets, AR for accounts receivable, AP for accounts payable, L for liability, and so on and so forth. Because I just find in future when you would be entering entries and picking up the account, I find it useful that all the A's are my asset accounts, all the AP are my payables account, and so on and so forth. So that was the whole reason behind this definition. And that takes care of our account categories. Let's go over what are these lists are. These will be the helpful drop down list derived from these columns, and maybe we can quickly go over them. They are very easy. All we're doing here is that get us the filtered list, filter the list of all these abbreviation based upon our active column chain. So once we do this, close the bracket, and it filters it, but because it gets a duplicate, we have to put a unique in the beginning. So we can do unique, and at the end just close the bracket. So that now we get a unique list, and let's do one more step on it, which would make it sort alphabetically. So just put a sort function, and let me just close the bracket at the end, and we're good. Same goes in here. It's the sort. You can look at the formula here. It's a sorted list of the filtered account name. The purpose of these drop down lists are that they becomes an aid whenever we want to use them here as a choices. That's all. Let's go back here. That takes care of the account categories. Let's go to the next step and discuss the TAccounts itself. So let's now discuss the primary TAccounts that we would be using in our transactions. And this is a lot of columns. In fact, the column that has been highlighted here are nothing but the cascaded values coming from our category table here based upon whatever account is picked into the primary selection here. In other words, if you change the selection, all these highlighted columns will change because they would be picking up the corresponding columns from this table. And we can quickly check one formula, because I'll just go over one formula, and the rest of the column have a similar formula, except they would be picking a different column. Like here it would be simply X lookup. We are looking for this value from our accounts column here, and once we find it, return the corresponding value from our ID table, say in this particular scenario, and and that's what is picked up in here. Likewise, we can you can book so this column here will pick up the is pending condition, prefix, debits, and credit column based upon our primary value selected here. So going next further, ID and name is what you would be picking, what you would be defining for your own business. As long, all you gotta make sure that the ID number remains constant, and you do not change it. You can rename the bank and all the other accounts that you'll specify in this column, but IDs must be lines in the stone, because ID is what we use to summarize it in the summary table and not some other places in the file. And full name here is nothing but that we are just prefixing the prefix to the bank, to the name here into this column, and that is what would be available in the transaction list. Description is nothing but just a healthy, notes aid for your own help. So that finishes up our discussion on the TAccount column definitions. I took the liberty by adding some typical TAccounts that you may find useful, but feel free to extend that column per your need. So as long as your primary category here is defined correctly, the debit and the credit type of the column should be correct as well. The file that we worked on today, the link to download that file is available in the description below. And in the next video, we will carry on this work by associating these numbers and start working on our journal and ledger entries. And last but not the least, we would really appreciate if you consider liking and subscribing to the channel. We'll look forward to see you in the next video. Thank you very much.